first session after the break, driving innovation and competitive advantage. And for that, I would request Mr. Evani Keshav Rao to come up on dais, President Digital Banking Yes Bank. Mr. Evani Keshav Rao is an experienced leader skilled in banking, payments, telecom, fintech, and enterprise solutions, proven in crafting, executing, and marketing pivotal strategies, merging technologies with commerce. Renowned for concept to market and digital transformation, expertise driving profitable product creation via tech trends and market insights. Let's give it up for Mr. Evani Keshav Rao.
You're able to hear me? Good. So today we will be covering a topic as how we can innovate and compete in the current BFSI segment. The thought process and the philosophy, what we are trying to drive here is, will the innovations work? How do we give our ideas, how do we get our ideas to the market? How do we present it in a way where people and the other end users will accept it? So let's, moving ahead. Okay, how many of you are aware of this? I can see one hand. Ma'am, what do you... Right. So this is called ARMA. And the reason why I have put this up is this was one of the first birth for banking technologies. This is called electronic recording machine for accounts. And this was created by MIT and used by Bank of America in 1953. Now, this was done before ARMA. We were only looking at a card with a name and address and other details in a branch on a paper, which was your account details. With ARMA came the birth of account numbers, because machine only understands numbers, and that was the birth of banking technology. And this was in 1953. Moving ahead, we see in 1980s, we moved from a branch banking, which was limited in a time frame, from a 9 to 5 kind of a job, and we see the introductions of ATMs. ATMs were giving us access to the same kind of services that a teller would give offered in a 24 hours by 7 module. And in a similar fashion, we have seen the same kind of evolution in India. We saw in 1993, we saw the RBI's initiative for the core banking with respect to the revolution that we see right now. It is everywhere. The NEFTs and the ATMs were launched, ATM networks were launched. We see the first mobile banking applications that came in somewhere in 2004 by SBI and ICICI. We also saw a lot of concepts around interoperable ATMs during that time. And I would call that the neo-internet era, when the internet was just coming in. And all of these innovations were very new, nascent, and not everybody was actually readily onboarded onto them. The second phase was the mobile era, where you've seen a lot of smartphone evolutions. You've seen a boost onto the BC model that you see today, the Aadhaar revolution, the rise of payment gateways as we know it. Then we had NPCI's new age applications which came in, the IMPS, the NUUP, BBPS, and other pieces. We also saw a lot of bank mergers, the talks of bank mergers happening, while we also had seen the PMJDY, and payment bank and small finance bank coming up with better use cases for the unbanked market. After that, what we saw was a very different era. It was called the digital transformation era, which is like right after from the demonetization phase, where we know the cash was short, and then we were forced to move into the digital banking domain. And we saw a boost in UPI, we saw bank mergers at that point of time, we saw a lot of fintech revolutions happening, API, open banking came in, the terms called, started becoming very popular. We had public infrastructures which were coming up. The India stack usage went high, and right then we had pandemic. And that triggered a different era altogether. The digital payment boost just skyrocketed. And somewhere in 2020, they realized that everybody had a mobile, and then everybody wanted credit access, and they came up with a concept of formation of open credit enablement network. And these kind of regulatory innovations also start coming in. With the birth of RBIH, RBI Innovation Hub, we saw digital lending guidelines coming in, version 1 and version 2, and we had account aggregator frameworks. And that set the context till now. And from 2024 onwards, what we can see is it will be an era of a new age technology that will come in, where the innovations will be very, very different. The market acceptability will be very different. And they will be the era of super apps, virtual realities, metaverses, AI, ML, blockchain, wearables. Name anything under the sky, everything will be made accessible through a very different set of technology that was not there before. So what I'm trying to give you a perspective out here is that every innovation will not be successful. And every organization will not take a right decision on the innovation or the idea immediately. And there will always be a postmortem to all of the thought processes that will be put in. And each postmortem will come into 4 segments, as I would call 4 quadrants. Organization or the market may never accept an innovation. To name a few, super apps. Even now, the banks have not started the work on that. Very few banks have tried hand in it, but most of the banks have not touched it, which gave way to Paytms of the world and PhonePes of the world to be successful. And then there is technology which is too early for the market, and it waits for a very long time. QR payments. The first QR payment I worked on was in 2004. It was on a desktop with a mobile phone access, trying to do a 2-factor authentication and a payment. But it only kicked off after 2010 or 2013. The start of QR payments only started kicking out. Any person in the acquiring business will say that's the birth of, it just kept waiting on that front. Then we had too late. A very good example of too late business is Amex. Till 2008, 9, 10, Amex was primarily only on traveler's checks. It never ventured into smart cards or EMV cards. By the time it came in, it was too late. Master and Visa already had taken over the market. So you see how the innovation layouts are getting structured. It is always about being in the 4th quadrant, which is on time. And a very fundamentally best example that comes out from India is UPI. Towards early, when the QR payments were just getting set, Paytm did a lot of groundwork. A lot of merchants were pulled in. A lot of field work was done. The digital payment enablement was proven. And then UPI came in after demonetization happened. And then it really changed the whole structure. And then pandemic happened. UPI started gaining traction. And every single transaction that we are doing right now, 90% of the transactions are on UPI. And that's what is the right time at right place kind of quadrant. The success of a product lies in this quadrant. As we speak, it is a very known fact that 35% of all digital transactions worldwide are being done on UPI from India. So, how do we innovate? How do we bring a paradigm shift with all that is happening, and how do we make the enablement on that right time quadrant? The piece is that you have to split it into 2 categories. One, where you have a design thinking approach as to how your product will be. And I have broken it into 2 concepts here. One is hunt. You look out for industrial voids. What are the white spaces in the industry which are not addressed yet? What is available for you to actually solve in the industry? And here what you have to look at is taking it's a very second approach process where you say you take a process which is physical and then you convert it into digital, and then you give a solution on a mobile or a desktop, and then you launch it. It's much like your previous old mobile apps which were already available. It's just access of your banking services on your mobile apps. That's about it. Then you have the second category, which is called the NEO, breaking the matrix. And it comes with the concept of first principle design thinking, where you say, I will start everything from scratch. Two good examples are iPhone. iPhone had taken the concept of how a phone should be, left that concept and started anew. For 40 years, NASA was launching rockets into the moon at a rate of $6,000 per kilo. That used to cost around 1.2 billion, till SpaceX, Elon Musk came and changed everything with a reusable rockets. Right now it costs $300 per kilo. That's the power of first principle thinking. When you start afresh, you say, I will do everything new. And that's what is going to change. And first principle thinking, I would actually give a very, very due credit is to Paytm in India for bringing a concept of super app. I mean, the kind of concept that has enabled others also to take that leap, faith of leap, even banks and financial institutions. The second concept, which actually gives you a drive for innovation, is billion. The market is no longer limited to 10,000 users, 20,000 users, 1 lakh users. We are always talking in terms of billion now, because the access of internet, the access of mobile applications have reached far. And the whole concept is getting billion users, getting a revenue of billion. All of that thought has changed now when you look at ideas. It is no longer limited, it is quite expansive on the universe. And with a billion users, you will have data of a billion users. And that lays the foundation of our next generational thinking as to how we will manage this whole infrastructure. And this is where the center of our topic comes in, as to how IT inside BFSI will start aiming for and start working and innovating towards managing that billion. You will have to start thinking about the scale. You cannot have timeouts. You cannot have network failures. All of those elements start coming into your mind when you look at it. So a very broad approach is looking at cloud versus native approach, how you cost optimize your whole system so that you have enough your cost of funds reduces. You also have to look at audits and assessments on those data. Your information security audits, the application security audits, network security audits, and you have to ensure that it is well protected. Now the other piece is on the securitization. When you look at securitization, it is not just with respect to securitizing your data or your network access. It is also about securitizing your customers' data. Because you're dealing with a billion users, that's the scale that we are looking at when we are innovating. You also have to look at the next generational aspect of it, or as to how AI will drive it. Because once you have AI looking at this data and processing business rule engines and giving intelligent responses or intelligent decisioning making comes into the picture, that's where AI ethics will also kick in. And securitization of that whole element will start becoming more and more cumbersome for the IT industry inside BFSI, and that's where the whole focus will start going. And with that comes the third piece, where your innovation will always be governed, will always be regulated. RBI will always breathe down your neck and say whether your innovation will be hit in the market or will be a flop is also a decision which RBI may bring their thoughts into. Fundamentally, if I have to say, every innovation that comes into the market has the power to disrupt the industry or to bring down an economy if it is not done right. And I think that's where the governance and the regulation will come into picture. So it is not about having a good idea that you want to launch in the market. It is also a thought that you will have to see whether the regulations will not kick in to disrupt your business in future. A very good example for that is, I would mention, is with respect to fintechs trying to provide credit to the end users. A lot of fintechs who have been into loan business have had a setback over last 1 year when RBI came up with a lot of regulations around it. So how do you innovate? So I'll leave you with 2 tools. I'll try to make as much as possible in the given point of time. One way is to lay out an industry matrix, and I've given you an industry matrix here for a payment domain. So what you can do is you can lay out the participants on either side of the matrix, and you have payment initiators on one side, you have payment destinations on the other side, and then you figure out what are the use cases that you can work with. A very simple scenario out here, if you will take, between a person to person, there's always a remittance, there's a P2P transfer or a digital micropayments. Person to business will be merchant payments, proximity payments, it can be a travel and transport. A business to business can have a supply chain use case. It can also have a vendor payments use case. Government to person may be subsidy transfers, welfare funds, or government employee transfers, which can be in place. Government to government payments, if you look at it, can be center to state government payments which are there, budget allocations or government agency payments which are there. So what you look at out here is a white space in this. And then you say, in the BFSI, as a BFSI sector innovator, I would look at this white space, I will try to solutionize it. And there are 2 ways to solutionize it, as I have told you before. One, you take an approach as to just making a physical into a digital format, or you apply a first principle thinking to it. Everyone with me? Okay. The second approach, what you can do is you create an ecosystem. You become the center of that ecosystem as how marketplaces work. And then you drive your agenda around it. This is an example of an agricultural payment landscape that I've created. Fundamentally, banks are in the middle, and as you can see, you have workflows all around it. Whether it be the fertilizer companies, the farmers talking to fertilizer companies, or the farmers talking to distributors, product organizations, whether information people for consulting, or for milk cooperatives, or seed testers, or mandis, arthiyas, name anything. The thought around here is your idea and innovation for driving the billion has to come from a birth of a white space. And how do you derive at that white space can be achieved through these 2 tools as I've shown you. And that's where I think the next steps will start coming in. And fundamentally, when you have an idea and you say, I need the infrastructure to build it, then you also need the right technology in place. You cannot have a redundant technology and a legacy platform to drive it. Fundamentally, what will happen is it will be a single point of failure at some point of time. And that's where my last slide comes in, that I would want each one who's actually looking at driving innovation to have an understanding of these concepts. One should have a design thinking thought process as how user experience has to be driven. Second is an open banking concept on the API front. How do you enable third parties to access your technology? Cloud computing for flexibility and agility, scalability. Robotic process automation. Second principle thinking comes here, where you say, I have something physical which is robotic in process, which is standard process inside a bank, which has a standard operating procedure, and you make it digital or a phygital enablement. Artificial intelligence and machine learning go hand in hand. When you have a billion user data lying in the bank, how do you assess a customer? How do you know he won't fall into a debt trap? Or how do you know he will not, he will make his repayments? Or how do you know whether, looking at his data, whether you can cross-sell some products to him? All of the decisioning making will start coming in through these 2 models. And this will be your core of anything. In, the kind of number of traders that used to sit at JP Morgan before and now, it's almost reduced to 1/3 because of these 2 elements. Blockchain, my previous speaker has already spoken a lot about it on the DLT platform. Quantum computing is last bit which I will leave you with, because that will drive the next 10 years coming in the next generation after the AI era. what I had shown you. The quantum computing will not be in a manner that you are only looking at it from an encryption or decryption of a complex algorithm, but when you combine quantum computing and a cloud computing, I'm not expecting a bank to have its own quantum computer, but when it's on a cloud, you look at the possibilities that it can have, the AI securitization, ethical AI boundarying, the kind of business rule engine speed with which the AI decisionings will happen, and the kind of market predictions that it can do, the kind of economic thoughts that we drive, scale it 10 times. And that's what quantum computing will bring in for you. And that's how an innovation or an idea should be floated in the market in a BFSI segment, looking at the scale, looking at the market, looking at the acceptability, and looking at looking with a sense of longevity in the whole, I would say, universe of BFSI. Thank you. Any questions? Oh.